Good day all. Ira Epstein of Linn Associates with your SPDR ETF wrap-up. And this wrap-up is for Monday, the 11th of January, 2021, getting on to 6:30 at night. Interesting day. We walked into a buzzsaw today, but I think you should have expected that. I mean, if you watched any of the shows over the weekend, you know how they play them out on Sunday morning. Impeachment, 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 COVID, 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 nothing positive out of that, and away you go. Now, the good news is at the end of the week, we start the earnings report, so maybe we'll see something better out of that. Who knows, but maybe we had a Christmas surprise. We know that the markets doesn't have a high threshold, and I think that's the interesting part of all that. When I take a look at the biotech, and I'm leaving this up because I started off that way this morning, the first interviews I was watching of importance to me were the CEO of BioNTech, and in watching him speak about COVID and the mutant part that's come out of South America and Europe, he claims that they believe that their COVID vaccine, as it is, does a great job of defense. So that was important. And I heard another CEO of another manufacturer of a vaccine do the same today. They both said that they can tweak these vaccines in certain ways to adjust to whatever the situation is in the current strains that they're seeing. Now, get something new, they'll have to take another look, but there are certain markers that they put in, and I think that was a positive to hear. When you look at the daily bar chart, you can't get away from the fact that you're just swinging around. You left this, the holiday rally from November into December. That huge rally had a correction. Now you're into what I call the choppiness. The new money, well, money was deployed back and forth now. We'll see where that wants to come in. Is there a trend? No. As you'd expect. You have a lower low if you look at the swing line and a higher high. That is not a trend. Where's the battleground? I always call that 18-day moving average of closes the line in the sand. And if you look when the market got under it, it fought a battle back up to it and then slipped. Now it got over it, it's trying to stay above it, fighting a battle as it's falling back to it. So typical in a trendless market. What about Bollinger Bands? Well, you just missed the bottom one and the top one. You're staying away from them for the near term. So I'm going to call momentum in the market up to flat, starting to flatten out. Bias up, trendless market. SMH, still very much in the run to the upside. You can't get semiconductors. It's used in everything. You need them for phones, you need them for this and that, and you've already had 1, 2, 3, 4. You've got 5 days in a row where you're over that number. Now, unlike futures, you can go a little further in stock indices and these spiders that I've seen here. I shouldn't say stock indices, the ETFs and the spiders, than you do in futures. Futures, the 5th day is often the kiss of death. When you're over it, you're going to move to the right-hand side. But the theory is the same. Let me explain the theory. This is not a sign of weakness. Only 5% of the time do you stay over that band. That means it's on borrowed time. It's going to move to the right-hand side. The odds favor it doing it tomorrow, but doesn't have to. What it's saying to me is the strength of the market is here, and that you don't try to be a hero with this. Oh, it's going to pull back under the Bollinger Band, I'm going short. That is not John Bollinger's theory. It's not mine either. But it does give you an idea the market is stronger than normally it is. Normally you'll get to these bands and you back away from them. Get down to them, you back away. If you run them, it's more like this than it is just day after day of staying like that. That's okay. It's still the beginning of the year. Those 5 days make up trade volume days that most of the traders, this is really their first day back in the saddle. We'll see what happens from here. Again, the trend is up, not embedded, overbought. The industrial sectors going back and forth between upper and lower Bollinger Bands. Now what it has done is it had a narrower set of bands. You see that right here. Then it started expanding the band out. Okay, but it's still not a trend. You still have the lower low, the higher high. I think you're stuck with the market right here. What else happened? If we take a look, and you always pay attention, you had a big outside day down on January 4th. I was not here for that day. I was luckily in beautiful Mexico. But if you take out that day's high in the next 2 trading sessions, my rule of thumb is that the market's likely to make a run at the closest moving average above it or the Bollinger Band, the closest of. Day 1, day 2, right up to it after it took that out. So that to me was the signal. Now the market's had an outside day to the downside on yesterday. That was Friday. Today, the market down a little. If it takes that high out, I wouldn't know what to do with it. And you'll say, why? It's the opposite rule. Well, I have no key moving averages above the market. Here's the 200 day, the 100, the 18, and it'd be over the Bollinger Band. It does not mean it just has to pick up and run. I used that theory too, and that didn't work when I studied this. XLE. Market came down, holding on, but very overbought. Do you want to buy against the Bollinger Band? What are you supposed to do the first time you hit a Bollinger Band? Take some money off the table, and now you're hitting it again. I can live with that, but not interested in anything. QQQ. Lower low, higher high, sideways action, not a pipe. A true pipe goes narrower than this. We had one, I think, no, I don't have it right here. Do I have one back here? I'm just looking. Don't have one. Had it in the futures markets, but not here. But I call this sideways action that is trendless. Resistance keeps getting hit, but we know there's an upside bias to these markets at this time. The emerging markets scare the heck out of me, and I am a wild bull on it. You know why I'm scared? Everybody wants to be long it. I like it. I saw Jeffrey Gundlach today talking his 4 top trades. This is one of them, another one. I've heard analyst after analyst. You know, when you're on vacation, you're able to read a little bit and see things that you don't do in your normal time. It's a very crowded arena. That doesn't mean it's not the right arena. Very crowded, embedded reading. Pullbacks like this are just traps for those thinking the market's peaking out. Until that red line closes back under 80, I think it's going to get bought on the break, still by the pros. In gold, you're just moving from high Bollinger Band down to make a runs at the lower one. You're in a downtrend in key support at the 200-day moving average of closes. Now, back here at the end of October, beginning of November, that was when I was telling you this is where I think those investor-type people were buying. And I thought they were going to look for that Santa Claus rally, which they got. This is not the same. This is different. That does not mean it's not a value area, but it doesn't have that end of the year bias going for it, and that's what I'm trying to say. So could we get a bounce from here back into the 18 or the 100? We could. If you break from here, the lower Bollinger Band's just screaming, hey, that's a spot to maybe be covering shorts. And again, you've got some value traders stepping in at the 200-day. Even some of the big systems, that's a big moving average. They pay attention to it. I was watching today, I happened to be on Bloomberg News in Canada, BNN TV this morning, around 10:50 in the morning, and I was following an analyst as they were talking about the valuations of gold miners, and they thought that they were too cheap there. They're trading in Canada about 6.9 times earnings. That's a low number. And they've got all these reserves, and I happen to think the days of no inflation are behind us. Now I think that with all that is going to go on, with the Fed that is going to let inflation run hot, with Congress and the presidency controlled by the Democrats, they won't get everything through, but they'll get a lot more than they would have if you had kept control in the Republican side of the Senate, that there's going to be more spending, and that's going to be the beginning of this. Think about this. You're still, even though you're down, you're not in a crashing mode in these markets. You're in a correction mode. We'll see what goes from here. TLT, way overdone to the downside. I'm the super bear. I'm the guy that I told you before that I was on Bloomberg and saying that I think you've got the year of the creep. And that doesn't mean people. The creep being interest rates. I think they're going to creep on us all year long. They'll test the Fed. The Fed will do some maneuvering, whatever it's going to be. But I view this whole thing now as a top area in the market until proven wrong. Don't control COVID, it's proven wrong. Barring that, I don't think much changes the story. Last, in the euro, I was looking for a correction. I was telling my traders when I was on vacation. By the way, when I was on vacation, I recorded each day my videos for my paid subscribers, 20 minutes long, giving them everything just like it normally is. And I was looking for a break. I'm getting what I wanted. Have I changed my opinion? No. I was today on the phone with one of my friends that's a massive user. He's monstrous in oil, in olive oil, all over the world. And he has to hedge his currency. So, you know, he's always asking me, Ira, what's the dollar doing? Because is he better off with the euro strength, or what has he got to do here? I told him I was expecting this, so got a call, and I said, yeah, 114, 115 is what we were talking about, that it could go back to. Let's see what happens in this market, and you got to relate it to where you're at in the euro in the futures market. Remember, I do put out a Spider ETF subscriber video. I've changed the time of it. Effective, actually, it was effective as far as I'm concerned today. Now, the reason isn't just me. Let me explain. I really believe that for the style subscriber I'm attracting, they want to get the information to make a trade. The way I do the videos, there's a scroll bar on the bottom. So let's assume you wanted to pick one of the spiders or ETFs that I'm covering, and I cover 40 in these. You go to that section, interest rates, metal markets, energy markets, so on and so forth. They're there. They're all listed out, and I make it easy. But by me starting my recording at 8:40, I've got the opening of the market. I already know what the futures are doing. My combo traders have already got their information for the futures, and they can see what I'm looking at, and they tie it right into a spider that's working now. So let's assume I'm saying, for example, buy QQQ, and they just watch what I'm saying, where I think the futures might go. All day long they're looking at screens. They're not married in front of them, but people have them. They have our mobile app. I had one person today that I was laughing at. Not at the person. He goes, well, why don't I send them text? And I go, why should I send a text? We use our mobile app to send you a free push notification. Just hit the notification when it pops up on your phone, and you're playing my video right then and there, or on your computer, wherever it's at. It's going to work that way. Why do you want to pay money for a text? Didn't hear back from them. I don't think people realize we're ahead of that game. But to give this a try, it's the price of coffee. Come on. $8.95 with a tip. You know, you're a generous coffee drinker. Go to www.iraepstein.com. 26 videos for the month, each approximately 18 to 25 minutes long. On the weekend, you get one that's just for weekend traders. What do I mean weekend? You're talking weekly charts. So that's going to give you that picture. And then during the week, I will show some weekly charts with the daily. Because if I'm telling you to do something, I'm not going to leave those people abandoned. I try to give something for everybody. $8.95, give it a try. I'm Ira Epstein. You have a great day. Talk to you later.